Hey guys, welcome to the Bitcoin Fortress podcast, helping you increase your financial freedom. This is episode 157, recorded here on March 9th, 2025. This podcast is for entertainment only, it's not investing advice, so do your own homework, please. We are at block 887058. Moscow time is 1212, and the fees are very low at 1, 1, and 2. So consolidate those UTXOs, folks. We're going to get into the market news, update outlook, go through the weekly top Bitcoin news, talk about this week's featured post on the Bitcoin Fortress Substack, take a little look ahead at some cool stuff coming up, and we'll end with the weekly top boost. So with that, let's jump right in. Wall Street's benchmark S&P 500 index on Friday posted weekly losses of more than 3%, its worst weekly performance since early September 2024. Tariff uncertainties and mixed economic data slammed sentiment this week. U.S. President Donald Trump's back and forth over tariffs against Canada and Mexico has stoked confusion in traders. Markets have now given up all the gains sparked by Trump's election victory in November last year. In terms of economic data, tariff impacts showed up significantly in January's trade numbers. A huge spike in imports ahead of tariff implementation resulted in the trade deficit hitting a record. The spotlight was grabbed by Friday's February non-farm payrolls report. Job growth in the month was less than expected as federal employment took a hit from Trump and Elon Musk's push for efficiency. Friday did see some respite in the form of Federal Reserve Chair Jerome Powell reassuring in a speech that the U.S. economy continued to be in a good place. For the week, the S&P 500 slipped 3.1%, while the tech-heavy Nasdaq Composite slumped 3.5%. The blue chip Dow fell 2.4%. And looking ahead, investors next week will be focusing on Wednesday Consumer Price Index reading for February. Producer price inflation statistics for last month will be released on Thursday. So everybody's watching the inflation with the cooked numbers. Major firms reporting quarterly results next week include Adobe, Ferguson Enterprises, Dick's Sporting Goods, Dollar General, and Kohl's. So a lot of retail next week. Meanwhile, the Bank of Canada will announce any changes to its monetary policy on Wednesday, while the European Union will release industrial production data on Thursday. Jumping into the Bitcoin news, we have the week in review from Bitcoin.com news. President Trump signed an executive order establishing a Bitcoin reserve, dubbed Digital Fort Knox, funded by seized assets. Hmm, that was big news. I guess we'll get into that in a little bit more detail. The market didn't like it too much. Hmm. The adult actress, let's see, a porn star, shoots armed robbers who were after her 20 million Bitcoin fortune. That's interesting. Cryptocurrency trader reportedly earned over $1.6 million in profits by taking a highly leveraged 50x bet. Good for them. ETH Denver, don't care about that. And there's some more stuff here about the Bitcoin price, which we don't really care about. And there's really not much good in there. So moving on to Hodler's Digest. U.S. President Donald Trump signed an executive order that creates a strategic Bitcoin reserve and a digital asset stockpile, both of which will initially use cryptocurrency forfeited in government criminal cases. Just a few minutes ago, President Trump signed an executive order to establish a strategic Bitcoin reserve, White House AI and crypto czar David Sachs said in a March 7th post on X. The reserve will be capitalized with Bitcoin owned by the federal government that was forfeited as part of criminal or civil asset forfeiture proceedings, he added. Additionally, a March 6 fact sheet from the White House said the order also establishes a U.S. digital asset stockpile, which Sachs said would be made up of cryptocurrencies other than Bitcoin. More on that later. Former FTX CEO Sam SBF Bankman-Fried has reportedly been sent to solitary confinement after taking part in an interview with right-wing political commentator Tucker Carlson, which was not approved by prison authorities. This particular interview was not approved, a representative for the U.S. Bureau of Prisons told the New York Times on March 7th. According to a person briefed on the situation after Bankman-Fried's interview with Carlson was published, he was sent to solitary confinement at Brooklyn's Metropolitan Detention Center, where he has been held since August 2023. The Bureau of Prisons is said to have strict rules on who can communicate with inmates and how they can do so. The Office of the Comptroller of the Currency has eased its stance on how banks can engage with crypto just hours after U.S. President Donald Trump vowed to end the prolonged crackdown restricting crypto firms' access to banking services. Crypto asset custody, certain stablecoin activities, and participation in independent node verification networks such as distributed ledger are permissible for national banks and federal savings associations, the OCC said in a March 7th statement. I'll actually read that later on in the show. The OCC confirmed in a document titled Interpretive Letter 1183 that OCC supervised financial institutions no longer need supervisory non-objection to engage with crypto-related activities. Today's action will reduce the burden on banks to engage in crypto-related activities and ensure that these bank activities are treated consistently by the OCC. Acting Comptroller of the Currency Rodney E. Hood said. Some U.S. government agencies continue to deny transparency regarding their role in Operation Choke Point 2.0, a period during the Biden administration when crypto and tech founders were allegedly denied banking services, according to Coinbase Chief Legal Officer Paul Grewal. The collapse of crypto-friendly banks in early 2023 sparked the first allegations of Operation Choke Point 2.0. Critics, including venture capitalist Nick Carter, described it as a government effort to pressure banks into cutting ties with cryptocurrency firms. Despite recent regulatory shifts, agencies like the Federal Deposit Insurance Corporation continue to resist basic transparency efforts, Grewal said in a March 8 post on X. They haven't gotten the message, he wrote. United States Treasury Secretary Scott Bessent said that the U.S. government will use stablecoins to ensure the U.S. dollar remains the world's global reserve currency during the White House Crypto Summit on March 7th. Bessent reiterated the Trump administration's promise to end the war on crypto and committed to rolling back previous IRS guidance and punitive regulatory measures. Bessent then turned his attention to stablecoins and said, "We are going to put a lot of thought into the stablecoin regime, and as President Trump has directed, we are going to keep the US dollar the dominant reserve currency in the world, and we will use stablecoins to do that." Can you say central bank digital currency privatized? President Trump told the summit that he hopes lawmakers will get the comprehensive stablecoin regulatory bill to his desk before the August congressional recess. "I think there's more than a 50% chance we will see all-time highs before the end of June this year." Hmm. That was the quote from Corey Clipston, CEO of Swan Bitcoin. However, he said that the market participants first need to adapt to U.S. President Donald Trump's tariff threats and the uncertainty around inflation rates. The market needs to first digest tariffs, trade war fears, and growth scare fears. Bitcoin trading below 100,000 right now feels like a pause, not an end to the bull run, he said. Enthusiasm for meme coins appears to have cooled off after a series of bad launches and rug pulls, killing off investor interest, according to CoinGecko founder Bobby Ong. Metrics for token launchpad Pump.Fun immediately plummeted following the Libra rug pull Ong said on a March 6 report, with newly created tokens and daily graduated tokens on the platform falling over 90% since their February peak. The launch of Trump and Melania marked the top for meme coins as it sucked liquidity and attention out of the other cryptocurrencies, Ong said. See, do you think people are maybe learning? I don't know. U.S. authorities have sanctioned the operator of a shuttered online darknet marketplace, including his crypto addresses, which recently profited from Bitcoin price fluctuations. Iran-based Behruz Parsarad established the darknet marketplace Nemesis in 2021 and used it to facilitate the sale of drugs, false identification documents, professional hacking resources, and a variety of other illicit services for cybercriminals, the U.S. Office of Foreign Assets Control said in a March 4th statement. Under the sanctions, U.S. citizens are now blocked from dealing with Parsarad and any companies where he owns more than a 50% stake. Seems like the surveillance state's alive and well. Solana saw nearly $500 million in outflows last month as investors shifted to what they perceived to be safer digital assets, reflecting growing uncertainty in the cryptocurrency market. Bitcoin dominance increased 1% in the past month to 59.6%. So I guess maybe people are moving out of the shitcoins. Crypto is winning key legal battles in the US and growing in importance on the global stage, but the fight for regulatory clarity continues. Lots of unanswered questions, apparently, with the SEC. Meet lawyer Max Berwick, the ambulance chaser of crypto, the New York based lawyer suing Pump.Fun and the creators of the Hawk Tuah meme coin, says that when you're in the public eye, you're bound to catch heat. And that wraps up Hodler's Digest. Moving on to this article's from CoinDesk. This was updated on March 6th. Interest rate fears replace tariff fears as crypto pulls back. The latest in a series of reverse tariff threats by President Trump is having the hoped for effect on risk markets, at least halfway through the U.S. trading day on Thursday. The stock market initially bounced off a sharply lower opening, and Bitcoin rose through $91,000 as Commerce Secretary Howard Lutnick, in an appearance on CNBC, said the president would exempt Mexico from his new 25% tariff for any goods or services covered under a previous trade agreement. The nicer stance toward the country's neighbor to the south was confirmed later by a social media post from Trump. Positive moves in markets were short-lived, though, with the Nasdaq at its session low just past the noon hour on the East Coast, down 2.3%. Bitcoin has pulled back to $88,500, down nearly 1% over the past 24 hours. Possibly lost in the unending ebb and flow of news emanating out of DC is a sharp rise in interest rates across the developed world. With U.S. military support for Europe possibly on the decline, governments across the continent are pledging budget busting increases in defense spending. Germany, for instance, this week saw one of its worst bond crashes ever, with the 10-year Bund yield jumping more than 40 basis points to the current 2.83%. In Japan, where long-term Japanese government bond yields were little more than a handful of basis points for what seemed like decades, the 10-year JGB yield rose another 6 basis points to 1.51% overnight. That's more than double the level of 6 months ago. The moves haven't been ignored by U.S. markets. The 10-year Treasury yield, which had previously declined about 70 basis points since the Trump inauguration, has risen more than 20 basis points in the last 48 hours to 4.3%. The recent move in global bond yields has put me on high alert, wrote Lecker Capital's Quinn Thompson. Particularly concerning to Thompson is that yields are rising as growth slows. We are witnessing the exact definition of stagflation, which historically has not treated risk assets well, he continued. The large gains in interest rates brings a renewed importance to the February U.S. non-farm payrolls report to be released Friday morning. Economists are expecting payrolls to have risen 160,000 versus 143,000 in January. The unemployment rate is seen under remaining steady at 4%. A strong print and unemployment reports have tended to run ahead of expectations for many months running, could send rates pumping even higher and risk markets, crypto among them, into a new leg down. Next up, from Cointelegraph, Bitcoin reserve backlash signals an unrealistic industry expectations. The widespread disappointment surrounding the US strategic Bitcoin reserve, hailed as a historic step for Bitcoin adoption, suggests unrealistic investor expectations, according to regulatory experts. President Donald Trump signed an executive order on March 7th, which will utilize Bitcoin seized in government criminal cases rather than purchasing the asset directly from the market. The announcement triggered a more than 6% drop in Bitcoin's price, falling from 90,400 to 84,979, according to Cointelegraph Markets Pro Data. The reaction signals unrealistic industry expectations, according to Anastasia Plotnikova, co-founder and CEO of Fidium, a regulatory blockchain infrastructure firm focused on institutions. It was very clear that the US government could utilize the existing Bitcoin in their possession, aka seized funds, she told Cointelegraph, adding, it is bizarre to see such a big public disappointment coming from some industry players. Not that long ago, even the idea of a Bitcoin reserve held and supported by a federal government was a revolutionary idea, and now we see a very solid implementation. The Bitcoin reserve is a cautious approach with taxpayer funds, which makes this decision well aligned with the messaging from the administration, added the regulatory expert. Although the current plan does not involve government Bitcoin purchases, the order does not rule them out in the future. The order authorizes the U.S. Treasury and Commerce secretaries to develop budget neutral strategies to buy more Bitcoin for the reserve, provided there are no additional costs to taxpayers. Still, the short term investor disappointment paired with ongoing macroeconomic concerns related to import tariffs may push Bitcoin to a weekly close below 82,000, risking more downside volatility, analysts told Cointelegraph. Trump signed the historic Bitcoin reserve order a day ahead of hosting the first White House crypto summit, which also received mixed reactions from the crypto community. Despite its divided reception, the summit marks a pivotal moment for the White House's engagement with the crypto industry, according to Alexander Urbelis, General Counsel and Chief Information Security Officer at Ethereum Name Service. Urbelis told Cointelegraph, the very fact that the summit is happening is a dramatic shift from the hands-off approach of the Biden administration and is sure to resound with the blockchain community as well as younger voters. There are high hopes for the outcome of the crypto summit. One of these hopes is that engagement like this with the White House will continue long after the initial meeting, he said. Moving along, this article is from Decrypt. This was posted on March 7th. Trump plans to rescind and amend IRS crypto tax rules, sign stablecoin bill by August. A little more news on the Crypto Summit. President Donald Trump's administration on Friday detailed how the U.S. plans to assert its leadership in the crypto space during a first ever White House Crypto Summit. During a televised portion of the highly anticipated event, U.S. Treasury Secretary Scott Bessent spoke about the creation of a strategic Bitcoin reserve and digital asset stockpile, the regulatory weaponization against digital assets, and a federal framework for stablecoins. Policies under former President Joe Biden posed undue harm to innovators in the digital asset space, Bessent said. He added that the Treasury will work closely with the Internal Revenue Service and Office of the Comptroller of the Currency to rescind and amend once hurtful guidance impacting digital asset firms' ability to do business in the U.S. Trump's establishment of a strategic Bitcoin reserve and digital asset stockpile will meanwhile position the United States as a leader among nations, Bessent said. The strategic Bitcoin reserve and digital asset stockpile will contain seized funds while allowing Bessent and Commerce Secretary Howard Lutnick to come up with budget neutral strategies for acquiring Bitcoin, according to a White House fact sheet published on Thursday. President Trump is creating assets for the American people, while most past presidents have created debt, Bessent said, referring to Trump's newly authorized reserve and stockpile. On Friday, Bessent referenced stablecoin legislation as lawmakers in both chambers of Congress weigh a pathway to legality for stablecoin issuers like Tether and Circle. Bessent said that clear rules would help preserve the US dollar's role as a global reserve currency. We are going to keep the US dollar as the dominant reserve currency of the world, and we're going to use stablecoins to do that, Bessent said. Trump himself said during the televised portion of the White House Crypto Summit that he expects the House of Representatives and Senate to pass stablecoin legislation before August recess, providing him with an opportunity to sign the measure into law. Previously, Senate Banking Committee Chairman Tim Scott called for it within Trump's first 100 days. 24 industry leaders attended the crypto summit on Friday, including Coinbase CEO Brian Armstrong and strategy co-founder and executive chairman Michael Saylor. They're very much working with you, and you know a lot of them, Trump said in their direction. I just want to congratulate you for being at the White House today. As mentioned earlier, this is the news release from the OCC. OCC clarifies bank authority to engage in certain cryptocurrency activities. The Office of the Comptroller of the Currency today took action to reaffirm that a range of cryptocurrency activities are permissible in the federal banking system. The OCC published Interpretive Letter 1183 to confirm that crypto asset custody, certain stablecoin activities, and participation in independent node verification networks such as distributed ledger are permissible for national banks and federal savings associations. The letter also rescinds the requirement for OCC supervised institutions to receive supervisory non objection and demonstrate that they have adequate controls in place before they can engage in these cryptocurrency activities. The OCC expects banks to have the same strong risk management controls in place to support novel bank activities as they do for traditional ones, said Acting Comptroller of the Currency Rodney E. Hood. Today's action will reduce the burden on banks to engage in crypto-related activities and ensure that these bank activities are treated consistently by the OCC, regardless of the underlying technology. I will continue to work diligently to ensure regulations are effective and not excessive, while maintaining a strong federal banking system. Consistent with Interpretive Letter 1183, the OCC also withdrew its participation in the Joint Statement on Crypto Asset Risks to Banking Organizations and the Joint Statement on Liquidity Risks to Banking Organizations resulting from crypto asset market vulnerabilities. So the banks are coming. Sounds like there's money to be made. So, of course, they want to be in on that. Next up is an article from Bitcoin Magazine. This is one of the state Bitcoin reserve bills that's been moving forward and probably looks like the closest one to becoming law. In a vote of 25 to 5, Texas's Bitcoin reserve legislation has been approved by the Senate. So today, the Texas Senate has passed SB 21, a bill aimed at creating a strategic Bitcoin reserve for the state by a vote of 25 to 5. The bill will now advance to the Texas House for further consideration. Texas Lieutenant Governor Dan Patrick identified SB 21 as a priority bill for the 2025 legislative session this past January. The bill aims to position Texas as a leader in Bitcoin adoption by establishing a reserve of Bitcoin, which proponents argue will serve as a hedge against economic instability and inflation. Support for the bill was evident during a February 18th hearing held by Texas's Senate Committee on Business and Commerce. The hearing drew numerous Bitcoin advocates, including Pierre Rochard of Riot Platforms, North America's largest Bitcoin mining company. Speaking in favor of the bill, Rochard stated, Bitcoin will continue to accrue long-term value, so now is the perfect time to make a strategic investment. Senate Committee on Business and Commerce Chairman Charles Schwertner also emphasized Bitcoin's growing role in financial markets, saying Bitcoin, referenced as digital gold by the U.S. Treasury, has become a recognized asset in the financial markets. The bill's passage in the Senate comes amid growing national interest in Bitcoin reserves. Just days ago, President Donald Trump announced that the United States would be creating a federal Bitcoin reserve. President Trump is expected to provide further details on the federal Bitcoin reserve during the upcoming Digital Assets Summit at the White House tomorrow, based on Commerce Secretary Howard Lutnick's comments yesterday. Lutnick said that an official announcement is expected soon, stating a Bitcoin strategic reserve is something the president's interested in. He spoke about it all during the campaign trail, and I think you're going to see it executed on Friday. As SB 21 moves to the Texas House, all eyes are on whether Texas will successfully establish itself as a leader in Bitcoin adoption at the state level. If passed, Texas could become the first U.S. state to officially hold Bitcoin as part of its financial strategy, setting a precedent for other states to follow. SB 21 is getting close to the finish line of becoming officially signed into law. More updates on the status of SB 21 and other U.S. Bitcoin reserve legislation can also be found on Bitcoin laws. And there's a link here in the article, which, by the way, I'll post all the articles I'm reviewing here in the show notes. And they have a nice little graphic that shows, I think Utah actually is getting pretty close too to enacting a Bitcoin reserve bill. So very interesting. Sum total of all this in my mind is, um, I don't know, the Bitcoin reserve is probably neutral. I do worry a little bit about this whole, it sort of creates a perverse incentive for the government to seize Bitcoin, for quote criminal activity. And you could almost foresee someday that an unfriendly administration could just make it criminal to own Bitcoin, and then the state could just take it from you if they can figure out how to do that, which would be very difficult. 12 words memorized. So that's sort of the on the negative side of that. And of course, everybody was disappointed that they're not buying Bitcoin, but that hasn't been ruled out. But so, yeah, it's probably neutral. The crypto conference, obviously there was a lot of shitcoiners there and a lot of whatever they call it, Web3, um, which is fine. It's look, if they have a business case, if it's not just like a rug pull, have at it. I guess on the bright side, it's good to see that the government's not no longer like trying to chase people out of the country and trying to shut down the industry. So um, that's got to be a positive. And of course, the banks getting into the business and the SEC backing off and all that um, should allow for a lot of innovation and a lot of positive developments in the industry. So there were a lot of companies that were moving their operations to other countries that were friendlier jurisdictions. So um, I think that's a net positive. So, overall, I'd say things are probably trending in the right direction. And it's kind of crazy that the Bitcoin price is where it's at, but you just keep, Bitcoin will do what Bitcoin will do, and you just keep stacking. And, 5, 10 years from now, you'll look back and go, that was a good idea. And of course, don't sell, because even Trump is saying, don't sell your Bitcoin, which is pretty hilarious in the conference. And finally, I wanted to highlight this week's featured post on the Bitcoin Fortress Substack. This post is entitled WTF Happened in 1971, the Fiat Standard Societal Shifts and Bitcoin's Answer. So check that out. There's a link in the show notes to that article. And if you like it, please subscribe. It's free. And if you really like it, you can become a paid subscriber. $5 a month, I think. Um, I wanted to talk about also some upcoming posts. So next up on Monday, is top 10 ways to accumulate more Bitcoin. And then the lineup looks something like this. There's an article on capital controls. Next is Bitcoin's intrinsic value, kind of a deep dive into what is Bitcoin really worth. Um, Next up is the Bitcoin Strategic Reserve Executive Order. So, kind of a little deeper into that particular topic. White House Crypto Summit highlights major policy shifts and industry reactions. That's a new thing I'm doing called a deep dive. So, it's a little bit longer than my usual article. And then next after that is tax reduction strategies for W-2 employees with Bitcoin holdings. So it's kind of a specific thing, but should be interesting for a lot of people. Kind of goes through all the different things you can and should be thinking about to minimize what you give to the government because they waste our money. And of course, always doing it legally. Finally, I want to acknowledge our top boost on Fountain this week, once again, at God's Death with 236 sats. Thank you, sir. And I'd like to thank you all for listening to the podcast. If you enjoyed the show, please like and leave a comment. Also, don't forget to subscribe on your favorite podcast app so you don't miss an episode. You can follow my Substack. It's at bitcoinfortress.substack.com. And you can follow me on Nostr. My NPub is in the show notes. Just pop it in the search bar and you should be able to find me. It's the penguin with the pizza shirt. And with that, I will talk to y'all next week. Have a great week. Bye bye.